All right, well, welcome everyone. This is how to use a self-directed IRA to invest beyond Wall Street. I've used self-directed IRAs to invest myself, and we have a lot of investors that take advantage of it. It's an amazing tool, and not every self-directed IRA company is created equal. Trust me, we've worked with some that have been great and some that not so great. And so that's why we brought on CamaPlan, someone that we trust and really recommend. And Matt is going to let you know how you can invest with a self-directed IRA, what you can't invest in, and lots of other details. So I'm going to pass it off to Matt. Matt, take it away.
Awesome. Really appreciate the introduction and appreciate this opportunity to be able to talk to some of your investors, some of your network about how self-directed IRAs work. Before we get started, we have our disclosure. This is to make the lawyers happy. So this presentation is going to be purely educational in the sense of providing education about self-directed IRAs. CamaPlan doesn't provide any kind of investment advice or tax advice. We always encourage you to go do your due diligence and seek out the guidance from the appropriate professionals before making any investment or tax decisions. A little about CamaPlan is we are based out of Ambler, PA. We were founded over 20 years ago, and we have thousands of clients, excuse me, across the country. Um, the big cornerstone for the business is all about customer service, and it really stems from the owners themselves. They're entrepreneurs, they're real estate investors. They deal with a lot of financial services professionals themselves and don't like being put on hold. They don't like going through complicated phone trees. And so they've made CamaPlan a place where you can easily reach a real human being and get your answer to your question. Another big part of the business is providing education. We provide education to people who are interested in self-direction, either in webinars like this or just doing free consultations. That education also expands to professionals. So Carl Fisher, one of our owners, is certified to teach real estate agents, CPAs, advisors on how self-direction can work in a continuing education format. So let's establish some baseline information about what self-directed IRAs are. A self-directed IRA is not some kind of weird species of IRA that has its own rules and things that you can't do, or it's kind of, off in the corner and you have to be careful of it. Rather, a self-directed IRA just refers to the fact that you can invest in a greater number of assets than you would at a standard brokerage or in a standard IRA, such as with like Schwab or Fidelity. And I'm going to refer to Schwab and Fidelity because those are the big names. I'm not putting them down. They're just names that people are familiar with. And the kinds of investments that you can do with them are going to be typically like mutual funds, stock market, bond market, things like that. There's nothing wrong with those investments. We like them, but the IRA, self-directed IRA, is just an opportunity to invest in other things. And the key benefits of having a self-directed IRA to be able to invest in other asset classes is really about control and leveraging your own knowledge about a certain sector or something that you invest in that you might not be able to access if you're at one of those larger institutions. This is actually a quote from one of our customers, and he says it's about investing in what you know, understand, and can control versus using hope as a strategy. And so this individual had been investing or had built a career as a real estate broker, so he knew a lot about real estate. He had an IRA, it was in the stock market, but he wanted to leverage his professional knowledge and use his retirement money to fund deals that he could underwrite and understand very, very well. And so that's how he came to CamaPlan and how he's using his self-directed IRA. There's two types of self-directed plans, or kind of like two buckets. There's going to be your tax deferred, your tax deferred and your tax free. So the most common examples of each are going to be the traditional IRA versus the Roth IRA. And these are, like I said, probably the most common examples that people are familiar with when understanding what the difference between tax deferred and tax free. So with the traditional IRA, it's pre-tax money, and you're able to defer your taxes as your portfolio grows. But when you have to take distributions, then you will be taxed on those distributions at the tax bracket you're in. Versus the Roth IRA is going to be post-tax money, but your returns will grow tax-free, and you won't have to pay taxes when you take those distributions. We are particularly fond of the Roth IRAs, but the traditional IRA is going to be probably the most common account held at CamaPlan, then followed by the Roth IRA. If you're familiar with other kinds of retirement accounts, such as SEP IRAs and simple IRAs in terms of employment plans or health savings account and educational savings accounts, these can also be self-directed at CamaPlan. So it's just another way to think about how you can build those accounts using private or alternative investments as part of the strategy. I'd say one big consideration between the traditional and the Roth, besides the tax deferred versus tax free growth, are going to be the required distributions, the RMDs. So on the tax deferred side, there are required minimum distributions. So once you reach a certain age, around 73, excuse me, you have to start taking distributions from your account. Versus on the Roth side or the tax-free side, you don't have those same RMDs. This is a good consideration because or an important consideration when you're thinking about self-directed IRAs, because if you're investing in real estate, for example, that's illiquid, then you need to consider how you're going to manage your RMDs if you have them, if you're in these illiquid investments. So the Roth obviously gives you more control, but certainly it's manageable inside of a traditional IRA. You just need to be strategic with your tax professionals and your advisors about what you're investing in if you have RMDs coming up. Types of investments are very, very wide. So if, like I said before, if you're going to be investing in mutual funds or stocks and bonds, things like that, that's going to be at one of the bigger guys, we'll call them. But for all of the private investments that you want to do or alternative investments that you want to do, we can generally custody all of it. So the most common asset class that our clients are investing in is going to be real estate, whether you're investing into an apartment building or a condominium, if you're going to buy land, if you're going to buy property overseas, you can hold this inside of an IRA. In that second column there are notes and mortgages. I think this personally, I think this is one of the most sort of overlooked tools of a self-directed IRA, because it gives you the power to be a bank. Either you can structure a loan yourself or you can buy notes. There is a lot of power in being able to hold real estate, for example. But I think if you're looking for something that's a good natural way to begin self-direction and understand how it works, notes and mortgages are a pretty easy way to understand how the power of a self-directed IRA can really benefit you. The next one are going to be private placements. This is similar to what Break of Day Capital offers in their deals. So think of something where you're investing through a PPM, or like you're going to be an LP. A lot of investors like this because they might have an old 401k or an IRA that they're holding, and they're used to having a passive relationship to their retirement portfolio. They don't want to be managing it, but they see a self-directed IRA as an opportunity to access deals that give them better returns or greater diversification. So these private placements offer kind of the almost the best of both worlds, giving an investor a passive relationship to the investment, but also giving them more opportunity to access that upside on a deal. And then the last one I'll talk about are precious metals. These have been really popular in the past 36 months especially. So a lot of investors like the long-term strategy of precious metals inside of an IRA because the timelines really line up with each other. This table that you have in front of you, this is just uh, a list of investments that are common with our investors, but by no means is it the exhaustive list. We have a client who holds a dump truck inside of his IRA. I've heard of people having ownership in racehorses through their IRA. So there's a lot that you can do. And if you ever have questions on uh, an investment that you want to hold inside of a self-directed IRA, you can always just reach out and ask us. There are some things you can't hold. This is sort of really the fine list that I like to just narrow on. Collectibles, so no baseball cards, no rugs, no bottles of wine. These cannot be held inside of an IRA, and no life insurance. So it's a pretty short list. There's a lot more that you can do than you can't do, but these are some things that you cannot do. On the other side of the prohibited coin are going to be the prohibited transactions. So if you think about kind of what the overall theme of of prohibited transactions inside an IRA, it's going to be about keeping an arm's length relationship between your IRA and yourself, because your IRA is its own entity and it cannot benefit from you, nor can you benefit from it. The most common example that we see where people might run into issues, it's a good way to illustrate my point, has to do with real estate. So if you own a property and you plan on replacing the toilet inside the bathroom, you own that property, it's an investment property, you can go in and do that, no problem. But if you own that property inside of your IRA, you cannot go and provide a benefit of your sweat equity by replacing that toilet. So you need to hire someone who will go and do that, and their compensation will be filed with the IRS when you pay them. So you gotta make sure that there's no benefit that the IRA is receiving from your work. Conversely, you can't go and stay in that property yourself. So if you had a investment property in Orlando and you wanted to go take your family to vacation there, but it's held inside of your IRA, you can't do that. So you have to make sure that you're always keeping things arm's length. The other part of that is on family members. No one of lineal ascent or descent can benefit from your IRA, nor can your IRA benefit from them. Using our real estate example again, if you had that same property in let's call it in Austin, and you were planning on having a four-bedroom house, and you wanted to rent it out to college students who were attending university in Austin. Then you have a daughter who goes to Austin to that university, and you plan for her to stay in one of those rooms. If it's held inside of your IRA, you can't do that because your daughter's of lineal descent, and that's not allowed. But there's a difference between those kinds of investments, that kind of benefit versus partnering with family members. So partnering can happen, and partnering is that you can take your IRA funds and invest them alongside your daughter or your spouse or your parents to purchase a property or to invest in a real estate syndication. That is allowed by the IRS, and that's a great way for you to maybe access an investment that you couldn't do with just your IRA funds alone, or if there's a higher tier of investment that gets you greater returns, and the investment sponsor's okay with you investing with someone else. From the perspective of the IRS, it's also okay. So something to keep in mind, that there's a good opportunity to take your funds and partner with either a family member or your own personal funds that are outside of an IRA to improve sort of the buying power of your investment. I like to talk about the things that you can do inside of an IRA, but I think it's also important to kind of drill down and really give like a live example of how an IRA could work in a deal. And because this is a break of day capital um, webinar and you are familiar with the company, I wanted to use a break of day capital deal so that we could kind of drill down and see how that would all work, and you can see the benefits of an IRA. So these are the investment assumptions for this deal. Icon on Broadway is a deal they're raising for right now. We're going to assume that we're investing $100,000. The investment hold time is 5 years. The projected IRR and equity multiple of this deal is 16% and an equity multiple of 2. And then the projected total profit would be 100,000. Now, if we compare these investments, let's look at if you did it inside of a self-directed Roth IRA versus using personal funds. Start with the personal funds side. Your return total is $100,000. The income tax, if we're at a 37% tax bracket, is going to be almost $15,000. You're going to have to pay a capital gains tax of $12,000, and then there'll be a depreciation recapture that you'll have to pay of $5,000. On the Roth IRA side, same return, $100,000. There's no income tax, there's no capital gains tax, there's no depreciation recapture tax. There is unrelated business income tax, which I'll come back and explain for in just a second, of $12,000, and that gives you a net return of $88,000. So the advantage is almost 30% when using your Roth IRA. That unrelated business income tax from unrelated debt finance income, which is UBIT from UDFI. I want to go into the weeds a little bit because it comes up a lot with clients who are interested in using a self-directed IRA, and I think it's good to unpack a little bit. If you're not familiar with what UBIT is, or unrelated business income tax, it's basically a way for the IRS to tax investors on things that are sort of not passive investments because of the nature or structure of them. What triggers UBIT is two things: either operating income on a business, or if a deal is using debt. So if you own a business inside of your IRA and it has profit, that would trigger UBIT. Or if you're investing in a deal with your IRA and there's leverage, then you would trigger UBIT. So on the profit side, that doesn't really apply here in this deal, so we'll kind of put it aside. On the debt side, or unrelated debt finance income, that is what's happening that is creating UBIT in this deal. If you have a loan of, say, 65% or 70%, then that is the amount that is will have tax assessed on it at your tax bracket. And the good news is, it's number one, it's only on the amount that is equivalent to the percentage of the loan. So it's not all of your profit will have this tax assessed. It's just the amount that's equivalent to the percentage of the loan. So 70%, for example. The other good news is that normally inside of an IRA, you don't benefit from depreciation because it's already tax advantaged. However, with UBIT from UDFI, you can use depreciation to reduce your UBIT tax liability. Now, it's certainly not the most happy ending. We'd love to say that everything's tax free and you never have to pay taxes, but the way we look at it is UBIT is a good thing, because the alternative is the government could say you can't use debt at all in deals, and that would really reduce your choices and the kinds of deals that you could invest in with an IRA. So UBIT, while it is a tax, it's a mechanism that allows you to invest in different deals and increase your investment power, just the way a loan increases your buying power if you're going to go buy a house or something like that. In terms of process, to get started with opening up a self-directed IRA, it's pretty straightforward. We try to reduce the steps down to one, two, and three. There's other things that we do in the background, but for your knowledge, it really comes down to these three steps. First, you open and fund your account. Opening the account takes about 15 minutes on our website. You tell us your basic information like your name, you upload your ID, you assign a beneficiary, things like that. You also indicate how you're going to fund your account. You can fund your account in one of three ways. You can make a contribution of new cash, which is capped at $7,500 a year, or you can roll over an old 401k or 403b, or you can transfer funds from an existing IRA. Most of the people who are opening up accounts and investing in deals like the one I just showed you, the icon on Broadway, they're going to be rolling money over from an old 401k or doing that transfer. So after you've opened the account and indicated how you're going to fund your account, the next step is the rollover or transfer process. That generally takes about 2 weeks. That's just sort of the industry standard. We can't really control that too much. Um, your account is funded, and then it's time to make your investment. So how that process works is you have your investment document, like a subscription agreement, that's titled to the IRA. So instead of being titled to Matt Moore, it's titled to CamaPlan FBO for the benefit of Matt Moore IRA. If I'm the investor, I would initial that, and then CamaPlan would be the ones who sign it because we hold the account. Also, we have something called an asset purchase directive. Using me as an example, I would tell CamaPlan, this is where I want you to invest my funds through this asset purchase directive. And once the account is funded, we have that signed subscription agreement in this case, and the completed asset purchase directive. We will send the funds within 48 business hours, and now your investment's funded and your investment is active. That's pretty much it. In summary, what we do is first and foremost, we are required by the IRS, or the IRS requires a third party to administer these accounts. So we check that box, but we are a neutral third party. We don't have anything to sell. We don't have any investment advice to give, and we're not going to be pushing any products on you, which we look at that as a value add because when you're talking to us about using a self-directed IRA, you know that we're not trying to push any kind of investment on you. We're just trying to tell you about how to a self-directed IRA could participate in that deal. We are really looking at ways to help investors have more diversification, have more control over their retirement than what they're getting right now. And so we want to be able to provide that education to you to help you understand this strategy and really grow your nest egg and grow your retirement capital. Finally, we have record keeping responsibilities that we fulfill with the IRS, like 990Ts, for example, things like that, and reporting fair market values. And at the end of the day, we want to be one of the members that's part of your team of financial professionals. So that can look like talking to your CPA or talking to your advisor about what's going on. Really, we want to make it sure it's an open dialogue between us and everyone that you're working with so that your self-directed IRA investments aren't something separate that you're doing on your own, but rather we're supporting you and supporting your financial team to know everything that's going on. And that is it for me. So let's see um, if there are any questions here. Or you got that, Gary?
Yeah, yeah. Any questions? That was thanks, Matt. Really
Yeah.
appreciate it. A lot of great information. Um, like I said, a lot of our investors take advantage of using a self-directed IRA, like a CamaPlan. I've used it as well. So great vehicle. So if you're interested, while we're waiting to see if there's any questions, where can they reach out to you and you know, oh, there you go. Awesome.
So I'll ask you a question since we don't have any questions right now. If you think back to your first your first self-directed IRA investment and kind of going from making that leap, so to speak, what were the important things for you to learn, and maybe what were the things that you like the aha moments after all was said and done?
So I would say the paperwork piece, working with a self-directed IRA company because um, I needed more handholding,
Hmm.
and I was a bit frustrated because here I'm investing my own money and they're just taking forever to do
Yeah.
it. And we have some investors too that they're working with a company and it could take weeks, for it to go through. And that, we're pulling our hair out because, we're trying to close a deal, and that's what separates one company from the next is like how quickly, do they handle the paperwork and are they walking you through it? Because the paperwork is, I've done it a number of times and still sometimes I have questions, like sometimes you need some handholding and having a company that can walk you through it and move, quickly is really, really important. So that was a big lesson that I learned.
Yeah, I'm glad you mentioned that. I think I'm let's not kid ourselves. Investing from a self-directed IRA versus just wiring funds from your checking account, it's it is there's it's more complicated. There are more steps involved. There's no question about it. Um, so that's why we strive to reduce the confusion as much as possible, so that everyone's aware, whether it's the client themselves or the investor and the investment sponsor, about what's going on. And part of the way that we try to specifically help investors in that regard is we know like the documents that we need for the investment, and those in documents too. The person who knows them the least is most likely the investor. So the investor is probably not as familiar with what an articles of formation is, but those things, and so we front load those things ahead of time just to make sure that we're reducing the amount of paperwork that the investor has to handle, and that they can have a kind of clear, transparent, a clear path to what they need to do to be able to open their account, move their money into the account, and invest from that account, and just make it as smooth as possible.
Excellent. Excellent. Let's see. Well, I'm not seeing any questions, so you did a very thorough job.
Yeah,
But if anyone has a question down the road or you're watching a replay of this, certainly you've got Matt's information here. Don't hesitate to reach out. He'll be glad to help you and answer any questions you may have.
awesome. Yep, it was a short and sweet one, but hopefully that's a sign that self-directed IRA investing is not overly complicated. It can be straightforward, and we'll make it very, very straightforward to you. So I appreciate this opportunity. Thank you very much. To anyone who's watching, please reach out to me directly with that email address and phone number, and be happy to help you out.
Thanks so much, Matt. We really appreciate our partnership with you.
Thank you very much.
All right. Take
Bye
care.
bye.
Bye bye.